it comes to prospecting, though. I've been learning a lot from. He's like a machine. His group is. I mean, geez, you guys are great, amazing. I'm learning so much from their marketing strategies. It's machines.
That was a good call today, huh, Bo?
Yeah, I just sit there and I listen to everybody, and I'm like, God, these guys are like, they've broken down prospecting for, most of them are real estate brokers and wholesalers and investors, but they're all licensed agents, and the way they break down like their marketing, minds and their tools they're using, and I was sitting there going, geez, I've always just been kind of like throw out a net through like I'm a good marketer, but not door to door prospecting
Mhm.
essentially. And that's like what I'm learning, that if you want to do a lot of volume, you have to be, your prospecting has to be on point, and I don't know,
Mhm.
it's tough. Hey guys, we're gonna get started here in a little while. We're just gonna let people jump on. I'm gonna share this a little bit. All right. Okay, share it. Okay. All right. Well, that's good enough. Have you ever used StreamYard before?
I have not. No,
Yeah,
first time.
yeah, this is cool. You can stream to different locations. So you can stream to YouTube, different Facebook groups.
Nice.
Um, and then, yeah, so it's good. So then you can put like, there's Yana. Hey there. Then we got McGill. The people can post comments and questions, and you can pop them up on there like
Cool.
that. And so it's cool. It's cool. We actually got this, or Ty got this from Pace. We interviewed Pace, um, and learned about StreamYard because they use it there. But Pace he's amazing. I watched your interview with Pace as well,
Hmm.
and his subject to investing stuff. We love that.
Yeah, he's a fun guy. That one.
Yeah, yeah. So you look like you've been out in the sun.
I have. Yeah, I've been trying to work out every day in my garage, just outside. So get
That
some vitamin D.
Yeah, I've been doing that too. I've been going for walks. I never walked before, and now every morning I love going for walks. And like I met all my neighbors, because everybody hangs out at the park here, and I go and play with all their dogs, and then I don't need to get a dog because they play with everybody else's dog. So it's good.
There you go.
I think if there's any benefits to what shelter in place is that I started to cook healthy. I haven't eaten out in months and months, and
Yeah.
so I mean, and plus you're kind of more focused because you have nothing other to do than work it in your computer, and you're not getting as
Hmm.
distracted. So,
Yep.
but anyways, Ty, you about ready to get started here?
Yeah, I am.
Cool.
So we're all live, and here I'm just post this to Instagram one more time. So here we go. Here we go. So obviously, thank you everybody for joining us. We've got a great guest, Michael Zuber. He's from California. He's from the Central Valley. He's got, I think, one of the best podcasts out there on YouTube. I know he's doing a lot of YouTube videos. Michael, is it an actual podcast as well where people do the subscribe like that, or is it all just YouTube?
So everything is original first on YouTube, and then I have a team. I have an individual that converts every video that's over 5 minutes to a YouTube, and that goes out Saturdays at about 9:00. So they all eventually end up in a podcast where they can subscribe. And of course, it's called One Rental at a Time.
One rental at a time, everybody. So Michael is incredible. I met Michael at an event, a live event that actually Bo put together and sponsored and put it all together. It was incredible. One rental at a time. He's an author. He's wrote a book. I think it's super impressive, the number of rental units he has. He is a long-term big thinker, looking at passive income for the long haul to create lots of wealth. And I love it because his concepts, the way that he takes it is playing small, the small ball of getting started, one rental at a time. And so, Michael, thank you for joining us.
Ty, Bo, thank you very much for the invitation. Love what you guys are doing, and thank you for both of you being guests on my channel before, so I appreciate that.
I love it. So why don't we just start off, maybe just tell the listeners where you're from, your marketplace, and then maybe even to go into how you got started in real estate, maybe what you did before real estate and that transition before finding real estate investing.
Yeah, so again, just kind of it, Michael Zuber. I raised in California, lived in Sunnyvale, Cupertino, and now Mountain View. So if you know the Bay Area, I'm a Bay Area kid. My entire investing as far as real estate goes is in Fresno, California, which is 2.5 hours by drive one way. This journey starts for me in 2002. Before the journey starts, I was a day trader in stocks, right? I thought that was my path to being a millionaire. I reported a couple of decent tax years being a day trader back in the .com bubble era. So I had the tax returns to show that I was pretty good at it. At least I fooled myself into thinking I was. And then the correction came, which was nasty and evaporated, 6 figures, and was a very painful lesson, right? It is a casino, in my opinion. Stocks are, and when it comes for you, it's going to wipe you out. And that was a very painful and humbling lesson. 30th birthday, I'm on some airplane somewhere traveling for my day job. I read when I'm on an airplane because I don't travel well, so I need something to distract me. So I find Rich Dad Poor Dad at an airport somewhere. I wish I knew which one, but I find it there, and I devour it. And, it's the book I read for the next month. I read it like 6 or 7 times, and it just changed my life. And Rich Dad Poor Dad doesn't really tell you how to do squat. Right? It changes your mindset. What's an asset? What's a liability? It introduced me to the concept of rental homes. Without it, I never get started. So he deserves tons of credit for putting me on my journey. But then I had to go figure out, okay, how, right? Because in the book, Rich Dad Poor Dad, he talks about 2 condos, his in Hawaii and hers in Portland. And I was like, all right, okay, I get it, but I don't know how, right? So all the books I found in the beginning said, invest 30 minutes from home. Well, Ty and Bo, I at the time lived in, where'd I live then? Probably Cupertino. Nothing within 30 minutes of Cupertino made sense. And frankly, it still doesn't. So I was kind of stuck. And then finally, after a year of looking, I found I said, okay, either we're going to do something or not. We pull out a California map and we find Fresno after drawing a couple of circles. And we didn't know anybody. That's another thing that's interesting about my journey is I had no head start in Fresno. I'd literally been there drove through it one time when I was 13 on the way to Yosemite. I didn't have anybody in my family with real estate experience. I was already the successful one in my family, making 6 figures a year, but I just knew there was a better way, right? I didn't want to do my gig, my day job for the next 15 or 20 years. I didn't want to have to. And I just started, right? We found that first house on Norris Drive. I didn't even negotiate. I paid list. I put 20% down. Didn't have a property manager yet. And, we just moved forward. So, that's kind of the up to the first one.
I love it. What year was that? Roughly.
I've been December of 2002.
Nice. Very nice. Love it. And so kind of fast forward, I know that you and I've had some great conversations. And again, I'm going to encourage people to really check out his YouTube channel because he's got a ton of great interviews, great content. And what I love about Michael is that he's not pushing or peddling or selling. I'm sure, I don't know if you even do anything like that because I've never heard you really do that. I mean, if you do, I'd like to sign up. So, but my point being is that he is a guy that literally from practical, real life, day in and day out experience shares a ton of volume of wisdom and practical points of transitions. And so from that point, from that first rental, that was a single family house. Is that correct?
It was, yeah, 1818 Norris Drive East. Your audience could look it up on Zillow. If you do look it up on Zillow, it kind of has an interesting story. And one of the reasons I like California investing is because of the cycles, right? Because if you understand and are non-emotional, the cycles of a volatile market, right, up and down, can really help you. But if you do it wrong, it could really crush you. So let me explain what I mean by that. So Norris Drive, right? If you were going to look it up on Zillow, and one of you can look it up on your phone if you wanted to, we bought it for 107 grand. We sold it. We exchanged it. 1031 exchanged it. I believe in 2006 for 200. We sold it for like 284,000 or 264,000, something like that. Right, 150 grand more. Right, it more than doubled in 4 years. And the reason I bring that story up is not to brag. It's because what happened next? Next, the crash happened. Right. That house then retrades about 2.5, 3 years later for 75 grand. And just recently, as of, I believe, late 2018, retrades again at like 167, something like that. So the reason I bring that up is you can't just hold forever, right? Some people hear my story, one rental at a time, and they say, get a house and hold forever. If that's your plan or your journey, great. But if you really want to build wealth, you need to buy stuff in an appreciating market or a cycle and then get out, right? We 1031 all 8 of our houses into 880 units right in 2006. So we escaped the crash beautifully, right? Our cash flow went up. We got all this fake equity, right? Because again, that house that we sold at 264, it's not even worth 264 today, and it's damn near 15 years later. So we did that 8 times. And I bring that up because, again, now we go through this huge crash and then everything changes, right? People's business models were shaken here in the last 6 to 8 weeks. I've seen it before, right? I remember going to a bank because that's where I got all my loans in the beginning. I went to a bank, cocky, sure of myself, with an 800 credit score, 2 6-figure incomes, and a 7-figure net worth in 2010, thinking I'd get my next home loan. And the bank that had all of our money said, F off, right? Basically laughed at me. Like, we don't lend to real estate investors. You're part of the problem. So I went to the big bank across the street and got an even ruder answer. So people were acting shocked that the lending market just blew up their business model. But again, I documented in the book, it happens. When the market gets wonky, lenders tighten up first. And then you have to adjust. So we did hard money just because that was the only option. We didn't know any better, right? I'm not a guru. I just react, right? So we did hard money, which was like 60% of purchase, 3 points, 10% interest. And then we found private money and the world changed, and we bought like 40 properties in 2010 for nothing, for land value, apartments through houses. And then this journey comes back, right? Because what goes down comes back. And then in 2019, I was being made fun of because I was being very vocal about selling my apartment buildings. I'm like, this stuff's nuts. What the hell are you guys doing paying for all this stuff? I sold apartment buildings that needed 6 figures of income or figures of maintenance immediately. And I still got retail. I'm like, God, I don't know what these people are doing. So I sold, 50 or 55 doors and put a whole bunch of money in the bank and started buying houses again. And then, the virus hits, and then a recession, and then a depression. And I'm like, okay, well, I'm glad I got out again, right? If you want to overpay for anything I own, I will gladly sell it to you.
I love it. I love it. I love it. And so I'm going to keep going with a few more questions, and then I'm going to pass it to Bo, but I've got a few more questions that I want to pop off. And then also too, for everybody watching at home or at work or on your phone, on your device, if you have questions, let me ask you, Bo, how do you tee those up? The way that, is there a specific thing they need to do? Why don't you tell them that real quick?
Well, everybody should be, the problem is, and maybe I should change this, is that it streams to my personal page. It also streams to my our investing club page, and it streams to YouTube. So StreamYard doesn't have if they're in the real estate investing club, that's where we need to direct everybody going forward so that people can post.
So if you're in the real estate investment club and you're watching it there, your questions are going to get priority because he'll have the ability, not only that, but you also get the shout out because you're going to show them the banner, like show them just even a comment or people checking in and stuff. Cause I think that's slick. Okay. So there's Miguel. So check him out. Yana, there's Yana. Who else? Anybody else?
There's me.
Boo, there's Bo, baby. Bo, baby. Okay. So if you're watching it somewhere else, I mean, I don't know. I don't necessarily think they have to jump off, but ideally we want to encourage you to ask questions and do it in the comment box. Because in that way we get to shout you out and get to, interact with you, and then you get to connect, and we're promoting you as well. So we want to get more interaction, engagement. So if you have a question, post them in the comments. Bo's going to do some questions. I'm going to keep going now. Back to the interview, Michael, and thank you for your patience. With regard to, so now you've shared so much I love, and I know we talked about that 2006, 2008 journey for me. Mm-hmm. I was buying like crazy, buying big, buying multifamily units, doing conversions, doing a bunch of infill land development. And, of course, all that stuff like just exploded on me, like just yoke in my face. And we talked about that and the differences of the mindset. Talk a little bit about how many doors do you have now?
So they're doors. I don't count properties because I have a mix of apartments through houses. The largest apartment we have is 20 units, just for scale. I don't have anything in the hundreds or any of that stuff. It's 20. We're right around 187 doors, I think, the last time I counted.
Sweet. Love it. So 187 rent checks, or probably ACHs or whatever it is. He's got 187 streams of income for what they're doing. So that's number one. And I love that. And now share too, in terms of your transition. So the stuff that you sold in 2019, did you cash out or 1031 exchange and buy some different areas, or?
So I 1031, there was one gentleman, he wanted to sell me his portfolio of houses. So I 1031 out of one apartment building into, it was about 25 houses, 24 houses, I think it was. So that was a 1031 exchange, so like kind exchange. So you can go from apartments to houses. It just has to be bigger. So we did that, and then he held the note. All right, so we moved over the equity. He took some, and then he held the paper. So that was really cool. Got an interest rate at the time of 4% on what would be a commercial loan for me. So that was better than I can get. No points, no appraisals, no inspections, none of that stuff. So, and 20 years. So it was pretty cool. And then the others I just took cash. Right, I had I had the tax losses so that I could get out of them and not really suffer much of a hit. I had to pay some capital gains tax because I've done my taxes now, so I owed some money on them. But I'm doing just fine with some cash in the bank. So,
got it. So love it, love it, love it, love it. And so I'm going to pass it over to Bo. Bo, tee up the first question.
Oh, Jerry wants to know, where do you find your private money lenders?
Well, I find them by so I've done private money twice. So it's the story is important. So the first time I did it was 2010. So in 2010, I was a first or second line sales manager for a tech company, and I ran. I think I just had the West, which would have meant kind of like Denver West, but that meant I was traveling a lot, and I worked and managed a lot of sales reps who, if they had a good year, would make decent income. So what I was doing in 2010, though, is I had a website called wealthbuildingpro.com. It doesn't exist anymore, so you won't find it. But basically in 2010, blogging was what I did. So I talked about all the houses I was buying for land value. I would take a picture of it in its ugly condition. I would take a picture of the closing statement for 44 grand or whatever it was. And then I would just post it, and then I would take afters. So pretty much like most people are doing today on YouTube, I did that with a blog site in 2010. And I just did it because I wanted to remember what I had done. And sure enough, about 6 or 9 months after, probably 12 or 13 properties in, my network started to say, hey, I found this thing, and, what are you doing? And, very interesting. And how could I be a part of it? And, I talked about, hey, I always need more money, and why don't you become the first mortgage? Because you're getting 1% in the bank, and I'll pay you 10%. And, we secured over $1 million without even asking. I've never asked for a private money loan. They've all come to me. And the key is to document what you're doing. Even if you've never done it before, you need to be able to document what you're doing and show that you are a knowledge expert and you can find or create value. I don't believe you seek private money. I don't believe you ask for private money. I believe you document value, you prove what you've done, and then it comes to you. That might be wishful thinking, but that's what's worked for me twice. This go around, we've raised millions of dollars without even trying. And today it's all on YouTube, right? In 2010, it was a blog, and now it's all video.
Yeah, today I got approached, and a friend of mine who knows, likes, and trusts me has a good amount of capital, and he's basically says, put a plan together. We've got at least $100,000 to $200,000 a month we need to invest. I was like, well, so
Jeez.
you're right. I mean, I document it to a certain degree, because we do these interviews and people know me, and it just happens, right? Like, it's going to happen. Yeah. But also there's proof in the pudding, right? You were doing it. I'm doing it. Ty's doing it. So money is going to be attracted to people doing it. Like, if you can't, you have to get that ball rolling, or it's not going to happen for you ever, right? Like, if it's, you have to show the confidence. But yeah, I mean, if you can get the money. Now let's roll into, so, I've been watching a lot of your video blogs. And I just really want to kind of dive deep into your mind right now with the market, like what we should be doing as investors to prepare, and where you see the opportunities coming, and just kind of like positioning and striking when the time's right.
Yeah, so this is all in real time. One of the things I really love about YouTube is, first and foremost, if you ever watch my channel, I don't edit my videos, right? I don't do walk-in music and freaking all of that nonsense. I hit live and I talk, and I have a rough outline, and I'm done, right? It's so easy for me. But I put out about 3 to 4 hours of original content every week, and it's what I'm reading, what I'm doing in my business. And it's really smart guys like the two of you and others who've done more than me, right? The beauty of interviewing folks and having a channel now that's growing is I get to interview bigger and bigger people. But to your question, I'm sticking with what I've said in the last 60 to 90 days. I believe the market we are going into and we are currently in is set up to be the best 10 years for the single family home rental, bought, positive cash flow, below the median, right? That's a big measuring stick for me. I believe above the median luxury market is toast in the short term. I believe the consumer behavior is changing. I believe builders are have built the wrong quality of stuff, just too big and 7 bedrooms and not all of that stuff. I believe our mindset, this is going to be long enough to change consumer behavior, right? 9/11 didn't change consumer behavior. The Great Recession was close, but still didn't change consumer behavior. I believe this is going to be long enough. We're going to have double-digit unemployment for several years. It's going to change consumer behavior. So again, I think the single-family home rental is where you want to be for the next 10 years, especially if you can strike in the next 18 months, because this is why. I believe rates are going to be as low as we ever see them. And in the next 2 years, I can't guarantee that, right? When we start coming out of this, inflation will be one of the prices we pay. Plus, we are going to see banks layering risk profiles, right? Banks don't make a whole lot of money at 2.5% mortgage rates, even if the Fed's giving them money, right? They're going to start layering in higher risks. I do believe, and I put my money where my mouth is, that multifamily is in trouble for lots of different reasons. I think a lot of the deals done in 18 and 19, if you had bridge financing, you're effed. It's done, toast. If you did a deal back, like some of the apartments I bought back in 11 and 12 are fine, right? Because they were bought at the depth of the last recession. I didn't over leverage. They're now at, 30% LTVs. They're fine. But it's those deals done in the last 2 years that are in trouble. Plus, I do believe we're going to see A-class properties. We're going to see those tenants go, I don't want to live in an apartment anymore. Shelter in place sucks when you're in an apartment. They're going to go, you know what? I'm going to get my best friend, my sister, my brother, my mother, and I'm going to go rent a house. And if they don't have enough to rent a house, they're going to do it with somebody else. They will be multiple people living in the house because they get a front yard and a backyard. I think we're going to have, the inventory is really scarce. Today in my market, there's, 6% of the inventory is the kind of stuff that I have. And that's as low as it's ever been. So I do not see the great wave of foreclosures and short sales. I was very nervous 30 days ago and created a video called The Dark Side of Forbearance. They're doing enough things now to change that, where I actually think forbearance will help people. And usually it doesn't, right? Because you get a bill at the end of 3 months for four total months. Now they're talking about doing 12 months and then creating a second and sticking it on the back with 0% interest. And that's only due if the first is paid off. So they get paid off if you sell it. They get paid off if you refi it. And then, hey, if you hold it for 25 years, so be it. This forbearance thing actually might help people, because what they'll say is, will unemployment come back? Will people get a job somewhat similar to what they had in a year? God, I hope so. My goodness, I hope so. And if they do, then forbearance is going to be a huge cure-all. And what I thought a month ago about this big wave of single-family homes coming, it's not going to show up. And, that's just going to mean that prices stay firm, especially below the median. And I could actually see home appreciation in 2021 if forbearance holds tight. There are exceptions. I think New York is toast. I think the Bay Area is toast. I think Vegas is a huge question mark. But I think 95% of the country, just fine. I think they're going to see price appreciation. I think that Zillow 20 market thing is going to be very fun to watch the next year, because I think there's a couple of markets, New York, San Francisco, that'll go down, because why live here if you can work elsewhere, right? This work from home thing is legit. There's no reason to live in San Francisco if you don't have to walk to your Facebook or your Twitter or your, whatever office it is. So there's going to be an exodus of folks from California, no doubt.
And that's kind of, I think, one of the reasons I think Las Vegas it's more and more people are actually starting to actually live here and not just second homes. There's a lot of people like me, for example, where I go, I can buy something in the mid threes, 4-bedroom, 3-bath. If this house was in Walnut Creek, it'd be $1.3 million versus 350,000 or 380, right? It just made more sense. No state tax, gas, everything here costs less except for car insurance.
Well, again, I believe, right? It's funny, if this interview was last week, I would have argued vehemently that Vegas was toast. Because it's all because of forbearance, right? Yeah. If you're in the service sector, and you've been furloughed at some point, and the CARES Act said you get 3 months free, but on month 4 they send you a bill for all 4 months. Most people can't pay that, right? But again, this forbearance thing is changing and morphing, and if they really stick that 4,000 or 8,000 or 12,000 on the back at 0% interest, it's like it never happened.
Yep.
That changes the entire game. Vegas may survive just fine. Right? Absolutely. I mean, again, you asked me this last week, I would have fought tooth and nail and said Vegas is toast. Today, because of what they're doing with forbearance, I think it's got a better than 50-50 chance of doing just okay.
Yeah, I would agree with you, Michael. And I think you're spot on. I had a lot of, friends that are, in the real estate broker agent community talking about, REO, bank foreclosures and thinking that's going to ramp up. Mm-hmm. And I would 100% agree with you that 2 or 3 things happened. Is that in 2008, basically all the loans that were originated, all the purchase money was all fixed rate products, Dodd-Frank compliant, low interest rates. Yeah. And the truth is, if you're underneath the median value of most markets, I would say even in the East Bay part of the Bay Area, Contra Costa, Alameda County, I don't know Santa Clara as well, but I know Solano County, the East Bay, if you're under the median value, the truth is your rent would be higher than what your mortgage payment is. So I think a lot of people are going to bear down and, hunker down and keep their property and figure it out. And I think you're right. I think consumer behavior completely changes. It's interesting. And I want to ask you this question. I did see, and I have been tracking now and looking at commercial properties, and I don't know if it's just because my radars are up. Not that I'm actually going to pursue those. I'm just curious to see, but I see all of a sudden I'm seeing, maybe I was seeing one new listing of this particular, shopping centers or office buildings. And all of a sudden now I'm getting 3 and 4 and 5 emails a day.
Yeah.
I watched Jordan Belfort was talking about, and I don't really follow him deeply, but I came across as entertaining and interesting.
Yeah.
Where he said he projected that, potentially office buildings could go to zero, like oil, basically the way that oil went to zero because you have these empty buildings and because the maintenance and the operational cost of them, that's a potential. What are your thoughts there in the commercial world? What do you see?
Well, so commercial is going to be what we experienced in 06 with residential, right? I invested through that. It was traumatic. It was horrible. And it really impacted us, right? The residents, because it was the single family home was the asset, right? Commercial is going to be equally painful, if not bigger, but it's going to hurt hedge funds and insurance companies and pensions. And it's going to hurt, but we may not see it, right? The average person may not see it. Everybody felt 06, 07, 08. I do believe office and retail, the mall, are going to be hurt. I don't know that they go to zero. I'm a firm believer that there was at least land value in every asset. But yeah, they are going to be cut substantially. There are REITs already down 70 and 80%. There is an office, the third largest mall providers only collected 23% of May rents. And that's all they expect. The commercial sector, especially office and retail, this is their 06 moment. It's going to be ugly. It'll be just as painful. But here's the deal. The numbers are just just gigantic. I mean, you can't even fathom them, right? Freddie Mac or for Fannie Mae, I did a video on this last week or the week before. They had like 43 buildings already in forbearance. I'm like, 43, that's not so bad. It's $1 billion freaking dollars, right? 43 buildings is $1 billion in loans. That means the asset value had to be like 1.6, right? Because you only do 60, maybe 65% on a commercial loan. Man, we're talking gigantic numbers. You have WeWork in San Francisco, office building, has a $240 million mortgage on it. It's already trading at 73 cents on the dollar, right? You could buy that building, the debt, for 165. It is going to hurt and crush people. But you and I, we may not see it. We're going to worry about our jobs and paying our bills, but there will be billionaires destroyed in this crisis.
Interesting. Yeah, I completely agree. Let's queue up some more questions, Bo. What do you got?
Sure. So basically, you don't really see a price decline in single family homes over the next 12 months.
I would say 95% of the country sees price appreciation. I think San Francisco's down 15 to 20%. I think the Bay Area is down 15 to 20%. I think New York's down 30. But it's for other reasons, right? California's stay-at-home order. Listen to see what Tesla did. Joe Rogan's talking about going to Texas now. It's going to be a real big Cal exit is going to be a movement. And I have friends in New York that are saying, hey, man, if I don't have to, they work on Wall Street and make 7 figures a year. They're like, their bosses are telling them, get out of here. Go to Connecticut, go to Vermont, So we're going to see 2 very unaffordable markets get a lot more affordable. And their sticker drops this year are going to be hard. But they're small markets when you look at the mass of the United States. But if you're in those 2 markets, it hurts, right? I live in the Bay Area, right? So the house that I live in is going to be worth less. It just is. But most of the country, especially below the median, I bet there's price appreciation. It's probably 2 to 4%. I mean, why do you think Zillow and Redfin and Open Door are coming back, right? Why do you think Goldman Sachs is building 35 or 36 homes just outside Vegas, right? With Home America, right? This is going to be a thing. Renting homes, single family homes, is going to be the best investment for the next decade. I am convinced.
I love it. So with that said, then, like for you and your acquisitions, you're looking at single family, and will you still pursue multifamily, that 5 to 20 unit building,
Mhm.
or is it all based on terms? It's based on if the deal. It's always how the terms are. Right?
It's always the deal, right? Basically I put every house, or I put every investment option in the same spreadsheet, and whatever turns out to be the highest cash on cash return. Sometimes it's an apartment, sometimes it's a house. I do not expect to buy a multifamily asset for 3 to 5 years. And again, here's my plan, and it's in my book. I'm running the same playbook I ran from 03 to 06. I'm going to buy as many houses as I can below the median that cash flow several $100s a month. I'm going to hold them. They are then going to appreciate, and then I'm going to 1031 out of those into distressed multifamily building. When I went from 8 to 80, that was awesome. If I can go from 20 to 200 this next time, or 40 to 400 this next time, life's going to be really good. That's the playbook I'm running. I'm going to buy as many houses as I can. I just went into contract on 3 on Monday. So I'm still buying. I'm an active buyer.
What's your average strike price in Fresno that you're buying at for single family?
So again, I buy all different types, right? If it's a fixer upper, probably about $100,000, and then I'm going to put 40 into it. It's going to be worth 180. Again, rough numbers. Everything's below 200. Everything's below 200. It doesn't cash flow for me if it's above 200.
And then you're going in with private money, and then you're typically refinancing and burring, essentially, paying off your investors.
Depending. Yeah, I would say that happens a lot. Yeah. But again, I'm lucky enough. I appreciate where I'm at. I can be very specific with my portfolio. I do have a collection that are just free and clear. I call it my oh shit pile, right? If things get really, 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 really bad, I have 20, 25 homes free and clear that I just let everything else go and live off those 25. So I'm very strategic with how I hold assets and what entities they're in and all of that. I always have the oh shit pile.
That's good. It's good. And Daniel Clayman says it calls it the FU wall.
Yeah, there you go.
FU wall.
I might steal that, Daniel.
That's good. So can you walk us through like the concept of the hub? I really I dig that, and tell us what's happening there, and then also how you're finding your deals. Give us kind of the big picture of the hub. Yeah.
Yeah. So one of the things I knew I wanted to do. So I retired about 3 years ago now. The first thing I did was wrote the book. And then I was about a day away from getting a job, which would have been a total failure. And that's when I created the YouTube channel, right? One rental at a time, because I just needed something to do all day. And then I kept getting bigger and bigger and bigger. And everybody wants me to go to Fresno and show them, right? Introduce me to your team, show me around. And frankly, I don't want to work, right? I choose to live my life how I want to live it at this point. So I found a distressed building in a great part of Fresno. It's in the Tower District, right on a great street called Van Ness, near Fresno City College. It's 7 little offices. It used to be a dentist office, and I bought it. And I have staffed it with real estate agents, wholesalers, flippers, Airbnb, and a general contractor, because I want that to be where people I trust, where I can send my connections. So I have none of those people work for me. They're all individual companies. You will never see Mike Zuber owning a company. I do not want employees. It's not my thing. But if I can help people and provide a place to go, that's what the hub is for. Right now it's been shut down because Fresno's, on stay-at-home orders. So I waived everybody's rent for 2 months as a good landlord. But yeah, it'll be up supposedly next month. That's what we're hearing, June 1st. And people are stopping by all the time. So the hub is a passion project, and it's there because I want it to exist for 100 years after I'm gone. And I just want to help people with real estate, whether you're an investor from Southern California or the Bay Area, or you're someone in Fresno that's looking to sell. That's why I put licensed agents. That's why there's a general contractor. That's why there's wholesalers, because I want to help. And, I do expect the building to produce a deal a month for me when people are there, which is awesome. And other than that, I'm there to help people. So as far as where I'm sourcing deals, it changes all the time, right? You asked me in 2019, it would have been 80%, 90% wholesalers and 10% MLS. Now I would tell you where we are since March, it would be probably 20% wholesalers, because I'll just say it like it is. Wholesalers are still stuck on yesterday, and I'm, yesterday's price, and I'm looking at tomorrow's price. And I've been here before and they haven't, because most wholesalers that I work with have less than 3 years experience. So I've been through the crash last time. So prices are being reset. So about 20 to 30% wholesalers, probably 40% MLS. I'm getting deals in the MLS right now. And then the other 30% are coming from my network. The deal that I did on Monday came from my network. It came from somebody who saw information about the hub, saw that I was the owner, and reached out to me cold via email. Said, hey, you tell me you're active. I'm a frustrated landlord. I want to deal with somebody who is helpful. He had a wholesaler lock up this property at $240, right? It's 3 houses on one lot, individually metered for gas and water. Perfect property. He asked me what I would pay. I said, well, dude, I can't pay $240. That's kind of yesterday's price. And he's like, well, what would you pay? I said, $150. Came back to me the next day and he goes, would you do $175? I said, well, I might do $165. And he goes, well, I got to tell you, $175 is my bottom number, blah, blah, blah. I said, okay, great. So I bought it for $175. I could sell it tomorrow for $215 if I wanted to. My intention is to fix up the 2 houses. Total rents will be $2,800 to $3,000 when I'm done with it. It'll probably take $30 to $35,000 to fix up what I have, and then I'll probably sell it for $320 to $330. Right. So it's fun when you don't have to say yes, because I have no overhead. Right. So it's fun to, just help and strike when you can.
Yeah, that's good. So do you like those kind of unique properties with 2 or 3 rentals on one lot? I mean, like if you're kind of let's say you didn't have as many rentals and as much resource as you had, and you were giving advice to somebody that had a little bit of capital and was looking to maximize cash flow, would you get them something like that?
Again, if I had to pick my perfect properties to start with, if I had 0 again, I would buy as many properties as I can with multiple houses on one lot. So most people hear me say that and they think triplex, fourplex. No, I'm not talking contiguous units. I want to be able to create separation, even if it's a 4-foot fence. I want to say, that's your spot, that's your spot, that's your spot. So if I could buy them, because when you buy in mass like that, you get a huge discount. But if you create separation in space, you can almost get the same exact rent otherwise. So my cash flow explodes. So if I had my druthers, I would buy as many properties as I could, 4 houses on one lot, and get as many residential loans as I could. Brilliant. People hear that again and they think fourplex. I'm not saying fourplex. I'm not talking 2 units here and 2 units here, or 1, 2, 3, 4. Not what I'm talking about. One house, one house, one house, one house. That's what I would do. Detached, individually metered, gas and electric.
Love it. Love it. Love it. Love it. So what, talk about, just share with our listeners and the audience at the level, and give us maybe in a couple of phases, kind of like in the early 2002 to 2006, how you were managing your units. Then when you got into the real heavy growth phase from 2010 to now, and then even looking forward, how are you going to the property management side of it? How involved are you? Phase 1, phase 2, phase 3, and kind of how do you hire a property manager? The headache, how do you take the headache and the hassle out of it or minimize it? Maybe just share some of your own personal practices.
Yeah. So the beauty of our story is it starts with property management day one. We have never self-managed. I would never self-manage. I don't want my tenants to know who I am. Just fact. We went through 5 different property management firms the first 5 years, and hiring and firing is painful. Even if you just have 4 or 5 units, because that's really all we had in the beginning. What I have found that works best for me is I want the owner of the property management company to have investment properties. And I'm not talking, hey, I own my house and I have another rental that used to be my house, right? Like the accidental landlord. That's not what I want. I don't want to go with the property management firm where the owner is a real estate broker and they don't have any investments. I don't mind if they're a broker, if they have investment properties. But if you're a broker that doesn't have investment properties, what I saw is their motivation changes when the market changes, right? I had a property management firm that had 50 of our doors when short sales and REOs spiked in 2010. And suddenly he wouldn't return my phone call because he became the go-to person for Bank of America and Wells Fargo. And he was printing money doing short sales, and he doesn't care about my little 9% property management fee. So that was the last time I was doing that, right? Because my service went off a cliff. Tenants started stealing, breaking stuff. that was uncomfortable, and I shouldn't have let that happen. So that's what I look for is a property management firm where the principal owns rental properties himself. That's been the best determinant for me after my first 5 years of paying.
I love it.
Somebody asked, Sai asked, what is your advice for someone starting in wholesaling in the South Bay Area in this pandemic?
Again, what I think you're going to have to do is you're going to have to understand tomorrow's pricing, right? Because the whole idea of being a wholesaler, all you're trying to do is you're trying to get in the middle of somebody being a seller and somebody being a buyer, right? And the hardest thing in being a wholesaler is not the buy side, right? If you really find value, the buyers will show up. So you've got to figure out what value is, and you have to figure out what the cash value is. And I would think being a new wholesaler in the South Bay would be very, very difficult for the next 4 or 5 months because we're not going to have much price discovery. Price discovery is a problem today, right? If you start seeing a mass exodus of tech workers, if that builds, even if it's not mass, even if it's a just consistent trickle, that's going to change the supply-demand picture. And then if you have problems with jumbo loans, which we all know the Bay Area is full of jumbo loans, which are non-traditional, not supported by the CARES Act, not supported by forbearance. The rules are different in the jumbo market. So you've got to be careful. In a market, being a wholesaler in a market that I'm calling to fall 20%, probably pretty tough in my opinion. So I don't have a lot of great advice. In fairness, I'm not a wholesaler, so you probably shouldn't listen to me. But you asked for my opinion, and unfortunately, you're going to get it. I won't guarantee you like it, though.
I got a question about you when you interviewed one of the guys that invested in Grant Cardone's fund.
Oh yeah.
Can you just give me like the quick minute overview of basically what he said?
So basically, somebody invested in Cardone Capital. So he is not an accredited investor. So he's a small investor. That's a very important point that some people didn't realize. So he's non-accredited. So he's not rich. He gets an email from Grant Cardone saying, "Sorry, can't pay you. Right? We're going to hold back your money." This guy flips out. He's like, "Where's my money? I need that money. I want my 5% or 6% or whatever it was." And then Grant Cardone gets on his Instagram and says he's going bankrupt. Remember that? It turned out to be a I don't know, a skit or something. But that did not rub this investor's did not make this investor feel good, and he was not happy, and he let the world know it. And that video got like 40,000 views or something. So that investor in Grant Cardone Capital, again, non-accredited, did not leave with a good taste in his mouth with all the antics that Grant was putting out there.
That was pretty. Ty was going to ask a question. What were you going to ask, Ty?
You had an interesting phrase. You talked about discovery. You talked about the guy asking about the South Bay and discovery and that, and kind of, again, maybe just elaborate. Like, what are you?
Yeah.
Like, how does Michael Zuber? Because you're a smart guy, and I'm really getting clear. And this is not ego stroke. This is just, I think you see things a little bit different. And I think you didn't elaborate, but what did you do? So in tech, you worked in tech before getting into real estate, right?
Yeah, so I was an accountant out of school. I have an MBA from Santa Clara University, so I'm comfortable around numbers, right? That's an unfair advantage. And then where I spent most of my career was in sales and sales management. So I had a quota every 90 days. It's the job that took me around the world, and I'm used to pressure, right? And I'm used to breaking down goals and performance and hiring and firing and having difficult conversations and taking your shot and negotiating. But all of that is built on the comfort of numbers. Right, I can do lots of math in my head better than most people can with a calculator, and I use that for a strength. So when I talk about price discovery and I talk about cash on cash and yield or all of that, sometimes I get away with it, and I speak about it too flippantly because it's easy for me, and I should break it down more. So I appreciate you asking that.
Well, see, this is good because this is different because I'll just share with you, like a lot of the personalities, myself and a lot of the guys or gals that watch this, a lot of people are drivers, and drivers can have a lot of success because they just go for it, right? They just push through. Where I love I'm guessing just based on the background, probably a high level analytical, but you communicate so well people really don't get that. Like I'm sensing it. I didn't get that. I kind of was getting it a little bit, but
yeah.
So
yeah, you're very well. You nailed it. I can play in both areas very well, which allows me to sing and dance in different areas, and also I can hide it when I want to. Right, I can be the analytical person if that's who's in front of me, or I can be the sales guy if I need it to be. So,
totally see it.
I'm lucky.
So, and I love that your skill sets are, I think, another level, like a whole nother level. So the question I have for you is that I want to get into that brain of yours. How do you underwrite? Like, so kind of take us through your thought process, especially like not how like 2000, it's 2020. You've got some, I think, some very accurate opinions about what's going on, the way that you see markets in Vegas and the Bay Area and San Francisco and highly dense population areas. So I want to just maybe for the viewer as well as for myself, how do you underwrite, like when you look at your discovery process of tomorrow's price, how are you looking at it? Like, what is it specifically kind of, what are your gauges? Are you looking at Zillow, Redfin? Are you running your own MLS comps? Are you like, what is your kind of like basic 5 or 6, 7 steps of how you underwrite and how you do that process of looking forward?
Yes, that's a great question. And the beauty of my answer is it's the same the last 15 years. Right. So if you think about what I've been doing, right, it's pre-crash, it's during crash, it's on the way back in this new adjustment. I'm not sure if it'll be a crash. It'll be a crash for multifamily, but probably not housing. And that is, I look at the yield or cash on cash return that most people call it. So I'll break it down for you very simply. This is what's in my course. People beg me all the time to create a course. I finally did on Teachable. It's called How to Get Started One Rental at a Time. So all I'm trying to do is I'm trying to figure out, what does this property produce, right? How hard is my cash working? If I have to invest cash into this, how many little soldiers are coming back? And that is the way I can break down a house with an apartment, right? A 1-bedroom, 500 square foot house with a 20-unit apartment building. And it's very simple math. I'll try to do it verbally here. So there's 2 numbers in the equation, right? There's a numerator and a denominator. And then that turns into a percentage. The denominator is the easiest one for people to understand. That is, how much cash does it take for me to secure this asset and make it rent ready? So what does that really mean? Those are fancy words, but let's break it down. So how much do I have to put down, right? Am I getting a bank loan or am I getting owner finance? What is my down payment, right? Is it 5%, 10%, 20%, 25%? Don't know, whatever it is. Then there's closing costs. There always is. Is it $1,000, $2,000, $3,000? Again, whatever cash I have to put in. And then the make ready. And this is what I talk about in my book, I got wrong. When I started out, I bought cheap properties because they were cheap. And I thought if I bought cheap, I could buy more. But what I didn't realize in the beginning is that cash to do make readies eliminated my ability to buy the next one. Because if you buy clean, yes, you pay more. But when you do a 20% on a clean property versus a cheap one, and then you add the repair money, your denominator is bigger most of the time, right? So that's my denominator. Down payment, closing costs, and then whatever it takes for me to make that asset rent ready. It can be 0. If I'm buying a turnkey property or a new building or whatever, it's 0. If I'm buying like the property I just talked about for $175, I estimated $45,000. Right? That was my estimate because 2 of the buildings need work. 1 is done. So that's the denominator. Now the numerator is pretty easy to understand. That's basically rent minus all costs. And I'm not talking bullshit costs. If the mortgage payment is $1,000 and $600 is interest and $400 is principal, I count 1,000 because I can't spend that $400, right? If I got to write a check for 1,000, it's 1,000. Yes, I know it pays down the mortgage and blah, blah, blah. I don't care. But then it's property management, taxes, insurance, reserves for bad debt, reserves for expenses, right? Or future improvements. And then there will be a net at the end of that, right? Let's just say there's $200 left over when you do rent minus all these things. So I take 200 times 12, right? Because I want to turn this into a bond, and my bonds are a year. So 200 times 12 is $2,400. So you take $2,400 divided by whatever the denominator is. If it's 24 grand, it's 10%. If it's 48 grand, it's 5%. So that's what I do for everything. Now to your question. Every day I'm asking myself, what is the average deal in my market? This is important. This is what I teach, and I talk about learning your market. If you watch my videos, my most common phrase is learn your goddamn market, because every market produces average. And all I ever want to do is good or great deals. So in my market in 2019 December, a good deal was 6%. So I wanted to do 7 and 8. A good deal or an average deal in my market in 2010 was 15%. So I wanted to do 18 and 20%. Now, where am I today? The price discovery is happening in real time. So my minimum today is a 10% yield. Right? Will that change if forbearance is not the big washout like they think it will be? Yeah, because I look at my market, guys, every day. I've been doing it for 20 years, and I just put my minimum target. And if you would have asked me in February, it would have been 6% was average. So I want 7 or 8. The world changed middle of March. So now I want 10%. And I have reserved the right to change in September. It might be 8. It might be 12, depending on where it goes.
We got a question that popped up here from Hannah. How does Michael predict rent growth or lack of will turn out?
So I believe we are likely to have rent deflation in high-end markets. If you're renting to Section 8 below the median, it'll be very difficult to raise rents the next 12 months. Just for full disclosure, the first 10 years of my investing career, which was pre-crash and after crash, I had zero rent growth. Zero. That same house I bought on Norris Drive, rented for $1,095. The day I bought it, the day I sold it, and the day it was foreclosed, right? Which is about 10 years. But then we went through about 5 years of just stupid rent growth. That property probably rents for $1,500 today. So I don't think we're going to have much rent growth. In fact, I'm planning for rent deflation, or at least getting ready for it. That's what I'm thinking.
That's great advice. Very good advice. Well, we got about another 4.5 minutes till we reach our hour. So let's kind of wrap this up, Ty. And what questions do you have lingering?
Yeah, I just I want to thank you, Michael, because it's interesting too, because I think, for some people getting started, you got people that are active, and then you got people that have been in it a long time. I love that, you're confirming things that I was thinking, thoughts I had about under the median, and it's a safe, depending on where you're at, kind of away from the dense population. So a lot of those things you confirm for me. I just love the way you think about and see, the opportunities and how things change. And so I really think this last couple of minutes, I just want to plug. So the book is on Amazon. Tell people about the book.
Yeah. So One Rental at a Time, I wrote as a compliment to Rich Dad Poor Dad. I read Rich Dad Poor Dad 25 times, but it doesn't tell you how. So I wrote One Rental at a Time to show you how somebody went on a 15-year journey, the good, the bad, the ugly. It's not a how-to book by any stretch. It is what we did, the good, bad, and ugly. And it takes you from a single house on Norris Drive and those horror stories to financial freedom of replacing 2 6-figure incomes in 15 years. So that's what the book is. Don't expect it to be a how-to book. It is our story, our biography. We certainly give recommendations. I wrote it to be valuable long after I'm dead. Because again, I think real estate is not hard. It's about understanding your market, understanding what a good deal is, and moving forward. So
I love it. And then just share, you mentioned about so you have a home study now?
I do. I finally created one. It's called
How do people find it? Tell us about it. How do we find it?
So it's called How to Get Started One Rental at a Time. It's $199. It is exactly what I do every day. It tells you how to learn your market. It tells you what I've done. It's 15 minutes a day. It tells you how I compare deals. It gives you my spreadsheets. It tells you about the teams. And it's I don't know, a dozen hours of content of everything I do. More importantly, I'm a giver. So I created a private Facebook group where students come to share their homework and questions and all of that. And now, because we're on lockdown, I do a private live stream just for my students every Saturday at 9 a.m. Pacific, where they just ask me questions just like this. And I do it because I have fun, not because I have to. I keep getting real estate gurus telling me I should charge $4.99 and blah, blah, blah. I'm like, you clearly don't know who I am, right? I'm covering cost because there is cost in storing and security and all of that. And no, I'm doing it to have fun. So that's why it is. You can get it on my website, onerental@a-time.com, or you go to YouTube and watch any of my videos. It's in the description.
I love it. I love it. Thank you, Michael. Did so good. The information is so great. I can't wait to rewatch it because I want to, like, literally, I was writing some notes, but I'm like staying engaged. So I'm like, I'm going to rewatch this thing. I need to repost because I'm going to go back through and reformulate. There were some things in my plan that I was a little bit veering off about, chasing my tail on commercial properties and some of that. And the truth is I've got the perfect lane right here, and you confirmed it. And I love everything you shared. I'm going to buy the course as well. I can't wait to dig in. And I'm actually, the spreadsheet itself, I mean,
yeah, it's there.
Even a guy like me, the spreadsheet I'll be able to figure out.
Absolutely. I am not, it's like 13 columns. It's very simple. But,
okay.
But more importantly, it's what I use. People get my accounting background and they expect some fancy ass macro. I'm like, dude, real estate is supposed to be simple. How much cash I put in, how much cash I get out, that's a number. That's all it is.
I love it. And the best part too is that if I'm trying to figure it out, I can just get on the Saturday morning thing and, hey, Michael, what do I do with column B and what the internal rate?
Yeah, and not only will I answer, but there's student engagement in the class. Everybody speaks the same language. They use my same slang. I will only open that private Facebook group for students. I just keep it clean. I get asked dozens of times a day. Everybody gets a no unless you buy the course, because if I'm going to commit time, it's only going to be to my students.
I love it. Last question. This is important because I also, something that was burning that I didn't ask. With regard to like your market, do you only invest in your core area? Why or why not? Or do you go, hey, I'm going to go to these other parts of, Central Valley or other states and things like that? What are your thoughts?
That is a great question. And it really boils. So first off, when I had a job, I didn't have enough time to learn another market, right? Because I believe I only had I literally, right? I would work 100 hours a week, do 200,000 miles on an airplane. I had so little time. I wasn't willing to devote time to another market. But now I'm retired, right? I could go to another market. But again, if you know anything about me, I like a low complex life. I don't want to trip anything up. I do not have I need an airplane and a Bentley and all the watches that other people do. I'm a simple human being. If my bills are paid and I can help 5 people a day, golden. So I have no interest in being bigger, which sometimes drives me crazy, but I'm comfortable being happy. I have a great life and I'm lucky for it.
I love it. You do, man. And your vibration is happiness for sure. From the day I met you, I see that this guy, now it all really makes sense now. So thank you for being on, Bo.
Oh yeah. Thank you, Michael. It was amazing as always. And we look forward to having you back here on this show. Ty and I started these Survive and Thrive series like just when COVID
Awesome.
And so we've had amazing guests, and it was another amazing night. And then tomorrow, guys, if you guys are available at 9:30, I'm streaming live with Vinny Chopra. We do a show every Friday morning, and we have the founder of Pelago, which is like it's really cool. It's like Redfin, but it actually analyzes properties right on the spot. And he has a real estate brokerage, and he's in Sacramento, East Bay, and Washington right now. But he's a tech guy, a tech real estate guy. So I think it's pretty cool because you can do a quick look on an MLS. I mean, back in the day, we were able to go on the MLS and buy deals. And like, I mean, we might go back to that market again here in the next 12 months where we can actually cherry pick good BRRRR properties right on the MLS. So that's tomorrow at 9:30. Other than that, we'll see everybody on the next one. Thank you, guys.
Thank you for tuning in.